All right. How's everybody doing this morning? It's good to see a nice little crowd here. So I'm looking forward to kind of continuing our conversation from where we started yesterday. Yesterday we talked about a lot of orders, market orders, limit orders, stop orders, and then we started to tie them together a little bit with OCOs and OTOs. OCOs are one cancels other, and OTOs is one triggers other. So what we want to do is we want to have markets that trigger one another, and so ones that will cancel one another. So if an if then else statement occurs, if this happens, then this happens, or if this happens, then this happens, else this happens. Right? So we want to look at our orders from kind of a computer mindset. If then else, if then else. So we're going to do one cancels other, one triggers other. So the first thing I want to do is just come in here and kind of show you how we're going to do that. This is going to be day trading. We're doing this on the, I got several markets up here. And again, today we're not really, our focus isn't on making money. Our focus is on trying to example and show you the tools so that you can use them to execute when you feel like it's the right time to be placing your orders. What we want to do is we want to be able to have the computer come in and trade for us. And that's really the name of the game. We want to have the computer trade for us. And so the only thing we need to do is decide when that time is. We don't want the computer to decide when it's time to trade. We'll decide when it's time to trade, but we want the computer to execute the trades for us once that happens. Now, mostly when we're going to do OTOs, that's when we have some sort of an open position, like a stop or a limit. So we can have trailing limits and we can have trailing stops. The trailing limit order is a little bit of an advanced strategy. We'll see if we can get to it today. But I want to start off with just the trailing stop orders, which are going to be our OTO. And so we're going to start off simple, and then we're going to build on them so that you guys can just follow along. And for those of you who are new, it'll get you caught up to where we're at. And those of you who have been here for a little while, it'll be just a little bit of a review. So we're going to come in, and the first thing we want to do is we want to intercept an order. So if we pull up our little tool in here, let's see, well, let's pull up this one here. We're going to go over to, let's see where we're at. Come on, baby, pull up the internet. New tab. Okay, so we want to come right here, and we're going to go over to slides, and we're going to slide down to our slides in here. A little bit slow to load. What we want to do is we want to find this one right here. This is the one we're going to be doing. It's called the intercept. All right. So we're going to be using a mathematical calculation to intercept the market. Now, what we're doing is we're drawing a natural trend line across the market like this. You see the natural trend line coming down as the market's coming down. We have lower highs and lower lows, and we're anticipating a reversal from lower highs and lower lows to higher highs and higher lows. So we're anticipating a downtrend switching over to an uptrend. That's when you're going to use this strategy. It's called the intercept order. Now, you see, you generally draw a natural trend line across the tops of those highs, and that's giving you the indication that that's occurring. Now, we're going to use some sort of a mathematical model. Now, in this example, we're using the blue light system from the Bulls and Bears, which is a hybrid parabolic SAR. We're going to use the ATR over in the actual example, but you can see that mathematical calculation coming in underneath. And the reason we need that mathematical calculation is because that's how the computer knows that that's a downtrend. So the dots are above the market in a downtrend, they're below the market in an uptrend. So if we come over here and go back to our system, you can see the market right through here. Let's just draw our natural trend lines. So we have a natural trend line. And remember, for every uptrend, there's a downtrend. And for every downtrend, there's an uptrend. So it goes like that. One up for every down. Now, it's not perfect. It doesn't always do it. And sometimes you get little flip-flops every now and again. But for the most part, you can always anticipate that there's going to be one up for every down in the market. And that's what this indicator, this is called the average true range. This is one I like, ATR. And the ATR is usually a moving average style system where you can run it up on like maybe a 5, 10, 15. The default, I think, is 20. So it looks back 20 price bars. So we set it to 20, and then it's going to have a stop factor generally somewhere around 1, 1.2, 1.5. This is kind of the general territory of where this average true range was designed to run. So it's the mathematical model of where this thing is telling you we're in an uptrend or downtrend. So remember, if the yellow dots, when you're using the average true range, are underneath the market, that means we're in an uptrend. If they flip over to the upside, that means we're going through a downtrend. Now, oftentimes you'll get a little ABC pattern like this, right? So the market will go up and you'll be in the uptrend and the dots will be on the bottom side. And then you get a little tiny pullback and then it'll continue up. And so what happens is that's where you're going to get your little flip-flops, like right in here. You might get just a little short set of dots as the market comes down, depending on how sensitive you've made your system. So like right here, it didn't flip because it's not that sensitive. But if you made it more sensitive, your ATR, if you brought this stop factor down and the ATR period down, you get a little flip-flop right there too. It just depends on how sensitive you want to make it. Well, what's the right answer, Lan? What should I put that on? Well, there is no right answer, and that's the unfortunate truth about these markets. They're dynamic. They're changing all the time. So depending on what the market looks like and depending on what your risk tolerance is going to be what you're going to set your tools to. Now, this is just one tool. There's another one in here called your parabolic SAR, and this is going to do basically the same thing. We're going to come in here, put PSAR, and I'm just going to go TNT defaults. Let's make that a little bit larger so you can see those dots. So the red dots are the parabolic SAR, and you can see it's a little bit more aggressive depending on what your settings are. Notice that the ATR goes sideways when a market goes sideways, where the ATR or the parabolic SAR kind of accelerates up into the trend, and then it flips over and accelerates down into the trend. You'll notice that the parabolic SAR is meant to be used as a stop location. It's a mathematically calculated stop. Let's remove these lines here so we're not getting so many lines that we can't see what's going on. So we got this is your trailing stop. So that's kind of the idea of these tools. It's to where you put your stop, and that's why it's got the ATR has a stop factor. So your stop factor is how close you want to put your dots based on an ATR period of 20, average true range of period 20. So the market's going sideways right now, so you're getting a little back and forth, but you can see that that's what that's what happens. You get one up for every down. You draw your natural trend lines in there, but you can see the mathematical models underneath it. We got one more that I'm going to turn on. It's called the Bulls and Bears. The Bulls and Bears is a full trading system, and so it's designed to change the price bar colors from red, yellow, and green, depending on whether the market's bullish, bearish, or neutral. So it's kind of a whole trading system in itself, but it's also got some blue lights in there. Let's turn on the blue lights for the Bulls and Bears. And right there. So that's the blue light system. Let's make the dots a little bit bigger. And so that's what you're seeing there too. That's basically the same thing as what I say. It's kind of a hybrid version of the parabolic SAR. The reason I say it's hybrid is because it's mathematically hyperlinked into the Bulls and Bears system. So you can see if you move the slider of the Bulls and Bears up here, the sensitivity slider, it's going to move those blue lights and make them less and more sensitive. And it also changes the color coding of the market so that the Fibonacci Elliott Wave system that draws the color coding, the delta cone probability is what that's calculating, tells you, the color coding, and it ties in with the blue dot. So it's all kind of mathematically hyperlinked together. And so that's how that works. That's why it's kind of a neat system. You don't have to try and guess and figure out what your indicators are. They're all working together. So that's why that's such a neat tool. All right, so we use that one. So I'm going to put that on sensitivity 72, which is what I like. If we turn off the ATR, you can see down here, the blue lights work pretty well. The idea is that this is your stop, right? So when it flips over, so if you're going along the market, well, you'd get out right here, and then you'd take a short position, and you'd start your stop way back here. Now, a lot of people don't like to start their stops so far back, but what that does is it keeps you from getting whipsawed out of the market when these markets kind of jump around when they first start to reverse and go different directions. So that's why the stop starts so far back, but then it accelerates in, kind of intercepts you generally right at the most opportune time. So you can see right there how it came in and intercepted and crossed over at the, pretty well right in there. You get the little bobbles in there. Of course, that's the nature of the beast. The markets, they flip back and forth sometimes, and when the market's dead. When the market's doing that, notice that the price bars in this case, because you're using the Bulls and Bears, the price bars are neutral. So if you're getting crossovers when the price bars are neutral, that's not a good thing. You don't want to be getting in and out of the market when the price bars are neutral. So if you're getting buy sell signals or reversal signals from your indicators while the price bars are yellow, that's danger, Will Robinson, right? That's what that's telling you. So we don't want to be trading when markets are neutral. That's a tough time to be trading. So when the market changes and goes from yellow to red, that's kind of telling you, hey, the market's no longer neutral, it's now going bearish, or vice versa. The market's no longer neutral, it's now going bullish. The problem we have is we don't know how long it's going to remain bullish, right? Nobody knows how big the market's going to move when it makes a move. If it makes a small move, well, you generally lose money or make a very small amount of money. Of course, if it makes a big move, that's the nature of the beast, right? That's how you make a lot of money. So the whole thing is trying to protect yourself and optimize your entries and exits. And that's what these tools are all developed around. So I'm going to come in here and I'm going to turn off the bulls and bears for now. And that's our hybrid system. We're going to come in here and we're just going to use a simple ATR. All right, and we're going to use the ATR just so that we can example some of these tools. We're going to get a little bit more aggressive on our entries and exits down here so we can have more opportunities to show you how these tools work. So we can bring this down. I like to start off with the ATR period when I'm doing day trading. I like it to be at a 1 and a 1. That's where I'll start. And then if the market starts to hump and pump, then I'll want to bring my stops in closer. And I can do that just by lowering that number right there. And that you'll notice the dots move. You get them really close. You get too many arrows, but you back them off a little bit and you can get some pretty good entries and exits on that thing. So I like, sometimes if the market's moving well, right around 7 is a good number. Sometimes it go down to 6. So it depends, but depends on the market. Markets are dynamic. So you got to kind of read them like a chart. That's your job. That's the human element of this. Now we're going to come in here and we'll go into our trading tab. And we're going to we're just going to start with one contract. We're here in the mini contract. And see that yellow dot right there? This is where we're going to do the intercept. All right, this is the intercept order. And so we're going to come in with our intercept order. And we're just going to start simple. I'm not going to get all fancy with OTOs and OCOs. We're going to start with the basics, and then we're going to add them so that you can see the general process. So we're going to just come in with a stop order. And a stop order, of course, is an order that gives you is an open position, and it specifies a price. And the way we specify the price is by dragging this little tool on the screen. It's a little calculator, calculates where you're going to put your order. You can just move it up and down, put it wherever you want. Now, in this case, we're going to do an intercept order, so we're going to drop it above. And it doesn't matter where you drop it. You can drop it anywhere you want up there, all right, because you're going to program it and tell it where to go. So we're going to click it, and that sets the order up here. And now we're going to right-click on it and say Edit Order. And it brings up our little screen, and all the numbers are already pre-filled in there. All we have to do is say we want to trail on the ATR, which is the little yellow dots, and we say OK. And that's going to make the computer jump that thing right down to the little yellow dot. Now the market's going to sit there, and as the market continues to fall, that little yellow dot will trail down. And remember, there's one up for every down. We just don't know how big the up's going to be. We don't know how big the down's going to be. So we want to try and capture the trend. The trend is your friend until it bends or ends. And generally speaking, we have a long set of dots, right? We have a long set of dots, and then we have a short set of dots. And then we have a long set of dots, and then we have a short set of dots. And we have a long set of dots again. So that's an uptrend. So we don't want to be trying to trade and capture the trends between B and C. We only want to be trying to capture the trend between C and D. Those are the long sets of dots. Long sets of dots, that's the trend. The B to C, the short set of dots, that's the counter trend. There's usually not enough money in a counter trend for us to make any money, so we don't try to trade them. So we want to try to catch the trend. The trend is your friend, all right? So that's how we're going to do this, and we're going to sit and wait until we can identify whether we're trading the trend or the counter trend. We're getting a long set of dots right now, so this is probably the trend. Now, we can get a trend reversal, and that's what we're looking for right now. That's why you use the intercept. You're looking for the trend reversal. So the market comes down like this, and you're looking for the market to turn and reverse and go back up. Now, oftentimes this is really super common, so keep this in mind. When a market reverses, it usually makes like 3 or 4 nice green bars, and then it'll make 2 or 3 little red bars, and then it turns and starts to go up again. So what happens is this is to stop you out. So you get in on the reversal, and then it comes down, stops you out, and then takes off and continues. Happens all the time. It's very common. So keep that in mind when you're doing a reversal strategy. If you got a weak market, sometimes that happens more often than not. If you got a strong market, it'll sometimes push through that. So it depends. But we get those little pullbacks because they're coming back to hit the orders that are trailing up underneath it, and then they stop you out just in time to take off. That's what they're doing. All right, you got to always think about this being in a carnival game, and they're on the other side of you trying to beat you up. All right, it's a football game. It's like a football game. I always tell people trading is like playing football. All right, we got an intercept. See that? So the market now just adjusted for us. Let's stretch it out here a little bit if we can. So you can see now we got an intercept order, and we just crossed the yellow dots, and they were trailing down automatically, so we didn't have to do it. And now the problem is that we need to put on here a limit order, right? A limit order to take our profits when it gets up to a certain level, whatever profit level we want. And we all have to put a stop order down here to stop us out if we're wrong. What if the market turns and starts to fall once again? Where do we want to get out and take our losses? So this is what we call our risk versus reward ratio. So from here to here, this is how much money you're going to lose, $250, versus how much money you're going to make. Right there would be $355. And that's just where I dropped them. That's not like any, oh, Land said to do it like this. No, that's not what we're doing. This is just a that I'm just showing you how the tools work. All right. It's not like, oh, that's how many I'm supposed to have on my risk reward ratio. No, generally for your risk reward, we like to put our stops behind the area of support, which is one price bar back, right back here. But for you, that might be a lot of money. That's a lot of money for a single contract. That's in this case, we're on a 1 minute chart. That's a $250 risk. So if that's too much, then you should probably not trade this market. You should probably trade the NASDAQ micro instead of the mini, or go to a smaller time chart. We can go down to a range bar chart that has smaller price bars, and you'd be one price bar back, you'd be closer. Or you can just come up here and say, I'm going to put my stop right underneath the bottom of that green bar, and that sucks it in a little bit tighter too, right? So now we're up $225. You can see we caught the intercept. The market's starting to rally on the break higher. Now what we want to do is we have our limit order up here, and we can take this limit order and we can put it wherever we want to try and take some profits off. Let's come down here and just say, if it comes up here, we'll take some profits off. All right, we took our profits off. Now we got $205. Now the problem is that we still got this order hanging out down here, this stop order. We don't want that out there, so we have to come in here and manually delete that to get rid of it. Now, the whole idea of the OTOs and the OCOs is that it does this all automatically for you. So if the limit order gets hit, it automatically deletes the stop order. If the stop order gets hit, it automatically deletes the limit order. All right, so we have that situation going on here. Hold on one second. Let me bring this up here. All right, that should help a little bit. Okay, so now that's what we're going to do this time. So now we're going to do it manually. All right, we're still going to do it manually before we get in here to the programmable buttons. We're going to do it manually. So we're going to come in here, and now we got an intercept to the downside. What if the market turns and starts to go down? We can come in here and drop our stop in here. So one more time, we're going to do it manually, and I'm going to add on to the OCOs manually. So we're going to come in here, and we're going to go edit order. It's going to bring up our little window here, and we're going to tell it to trail on the ATR, just like last time. No difference. But this time we're going to come in here and we're going to right click on the little tool, and we're going to come down here. Oh, it's got to be filled first. Let's wait for it to get filled. See if it'll fill. We'll just got to give it time. And we're going to catch the intercept in anticipation that the market's going to continue to fall at this point. Is it going to? I don't know. I don't know if it is. I don't know what it's going to do. We're just going to anticipate it. So this is an intercept order to the short side. Let's see if it'll come in and fill it. When it does that, I'm going to show you how to get into the market, how to set up your OCOs. Okay, here we go. Oh, it's still going up. We could sit here for half an hour waiting for this thing to go off. So here, I'm going to tell you what I'm going to do. I'm going to, well, I want it to go the other way. Well, let's fake it. All right, we're going to fake it till we make it. So we're going to practice. We're going to get rid of this. We could sit here for 10 minutes waiting for this thing to fill. It's going to flush right now. We could do it. Maybe we'll get it. 23 seconds till a new bar. All right, we're going to fake it. All right, we're going to fake it. Let's pretend like we're still long the market. So let's go ahead and we're going to exit out of this thing. So we're going to put our order in. We're just going to hit a buy market. So we're in the market. Now what we do is we right-click on that little triangle and say Add OCO. And notice that hooks these two orders together. One's a limit, one's a stop, just like we did before. But this time, it's putting them both on the screen at the same time, and they're connected. So if I just click anywhere, it doesn't matter, just click, that puts them on the screen. Now I can right click on there because we're doing it manually. We're going to come in here and we're going to come down here. This is the OCO box. So this is when they're in OCOs, you work in this box, and when they're not, you work in this box up here. Since we're doing OCOs and they're hooked together, we're going to work in this box. I'm going to come in here and tell it to trail on the ATR. I hit OK. Now what's going to happen? Oh, it just did it immediately. As soon as it went up there, it hit the stop, and notice that it automatically, one cancels other, it canceled the limit order. So that way we didn't have this widow sitting out there, hanging out there all by itself, waiting to be filled in an order that we didn't want. Okay, so we just clicked that off. And so that helped us by having the stop order that was trailing up on the yellow dots stop us out, so that and then it automatically, because they're hooked together with that little line, it automatically canceled the limit order. All right, and it's all visual. It's right here on your screen. The nice thing about that is that you can move those around and put them where you want them just by dragging them and dropping them on your screen. You don't have to sit there and fill out the little table all the time. Now, we do have a little table that pops up and you have to tell it what to do, but it's already pre-programmed in there by dropping the window where you want it. All you have to do is tell it what you want to trail on. All right, we're getting a crossover here. Now, if we would have been trailing up for entry, right, that would have been a one triggers other. You're going to see what it's doing here. Trying to figure out how we can work into this system the next strategy. Well, it's flushing hard right now. So that's our this is our trend. So we got our trend coming down. And then we got our small set of dots, the counter trend going up here. So this should be, technically speaking, right, this should be a long set of dots. So a continuation of the downtrend. Doesn't always happen. Sometimes it'll flip around and go back up, or just sit here and go sideways. But now we got a dot up here we can work with. So now we say I got a dot on the other side of the market. So we can come in here and we can drop a stop order in here. Watch this. I'm going to show you something really cool. And we're going to come in and we're just going to trail at ATR just like we did before. Now, again, it would have to be filled for us to be able to right click on it and add QOCOs and do all that kind of stuff. But we're going to come in here. I'm going to show you something really cool. Watch this. We're going to come in with a limit order, and I'm going to put a limit order in here, and I'm going to edit that, and I'm going to have it trail on the ATR. Now, what is a trailing limit going to do? Think about it for a second. Why would we trail with a limit? What if the market turns around and goes back and hits the yellow dots, but then continues again, just like it did here, just like it did over here? See, the market took off, you get in long the market, and then it pulled back, hit the yellow dots, and then took off again. Well, if you'd had a stop order, you'd either trailing for a reversal and you'd have got stopped out with a loss here. This could get you into a short position as the market pulls back, stops you out, which doesn't really stop you out, limits you into the market, and then starts to fall once again. So it would have made money on this trail up, because it would come back, limit you in, get you into the market, and then start to rally. That's kind of a neat little dirty trick if you miss the market like we just did. All right, we missed this fall. So we're like, we don't want to chase it, but if it wants to pull back and fill our order, we'll take it. We'll get in way up there on the yellow dot, because sometimes you get what we call a spiky dikey do, right? These little spiky dikey doos come in and they puncture through the yellow dots. And we hate it when it does that usually, but with the limit, see if it'll come through and puncture. There it goes. It just punctured it. Now the question is it going to turn and fall again? If it doesn't, we have to get out, because if it just keeps going up, we'll lose money. But this is an idea. It's like, well, maybe the market will come up, stop us out, and then turn and fall once again. If it doesn't, well, then you got to get out, right? So we use an OCO, add OCO, drop them in here. This is your stop order. Where do you want it? Well, let's just say if it keeps going up, we'll get out. And if it comes down, we'll make, oh, well, we got stopped out anyway. So that's a limit order. It's a trailing limit order to try and capture those little spiky dikey doos where they puncture through the yellow dot and then continue to move in your favor. Now, this one didn't do that. This is making a reversal. It's coming down. It's trying to go, broke the previous high. Let's see if it'll continue. Market's pretty weak right now. Obviously, it's not doing a lot of really good trends. So now it might turn and fall after going way up there and we got stopped out. We'll be sad that we didn't sit through it, but don't want to sit through too much of a drawdown. All right, we got another dot we can work with. So now this time what I'm going to do is I'm going to come in and we're going to put the stop order on there. And actually, let's program one in. So yesterday we were programming in our buttons. And so let's come in here, and down here we have QOCO1, QOCO, and we're going to set up an OTO. So let's come in here, and I'm going to use the same one we were using yesterday. We're going to come in here. We're going to rename it. All right, we're just going to call it number 99. We're going to call it OTO. Let's call it dash OTO. So we know it's one triggers other. We're going to be using a stop, and we're going to set the stop at, we're going to be stop entry. So this is stop entry, and we're going to use a stop out. We're going to get stopped out at 50, and we're going to use a limit order, take a profit at 80. All right, and we're going to trail the stop on the ATR. How's that? Now we're going to get really fancy. So now we got to go and build this. So we're going to use a stop, OTO, one triggers other. We're going to attach our stop at 50, a limit at 80, and we're going to trail on the ATR for entry, and we're going to trail on the ATR. Let's do ATR for exit. So we're going to trail on the ATR for entry and for exit. So that stop order will jump to the ATR. This stop order will trail on the ATR. So we're going to go like this, say okay. So now we're going to come in here, and when we click on this, this is our setup for a OTO, stop order to limit order. So now what happens is this is going to continue to trail up behind that yellow dot. You can see that we got an OTO in here. We got this is our stop, trailing stop that's been programmed to start trailing back down on the yellow dot when it occurs, when it gets one. And then this is your limit order, take profits down here. You can put this wherever you want, but it's gonna move this. You don't really want to, let's exit. You don't want to move it until that's filled. So go ahead and let's say exit the chart, and we're going to drop it on here again. And you just want to let it run until it fills. Once it fills, then you can move that limit order to wherever you want it lined up with areas of support or resistance. And then this is going to automatically program that trailing stop to start trailing down on the yellow dots again. So this is an OTO. Now the one that's going to trigger it, there you go. So that's the trigger. Once that triggers, these two become active. They're not active until the trigger. So that's the OT, that's the trigger part. OTO, one triggers other. So this center order that was trailing up on the yellow dots, which in the setup was this order here, this stop order right here. This one here was the trailing stop, and it was trailing up on the ATR. And then when it got triggered, it automatically activated the stop and the limit. So those stops and limits won't become active. So if the market hits them, nothing happens. It's not going to, because they're ghosts, right? They're ghosties out there. And so they only stay there as for you to be referenced as to know what's going to happen. Now that we've got them set, now if the market drops, what's going to happen? That yellow dot needs to flip to the other side, and then that stop order will start trailing down on that yellow dot all automatically. So now you don't have to do anything. Now you can go cook eggs. The reason you can go cook eggs now is because you got an OCO, one cancels other. So we had a one triggers other, which is this trailing stop is going to trigger those other two orders to become active. Once they become active, as soon as one of them gets hit, they've been programmed to cancel the other. So it's an OTO with an OCO. Pretty fancy, right? So now if the stop gets hit and you get stopped out, it'll automatically cancel the limit. If the limit gets hit, it'll automatically cancel the stop. And now that this order has been filled, we can put this limit order wherever we want it. We can put it way down here. We can bring it down with this area of resistance back here. We can line it up with this one here. That's why that line goes all the way across. You can go in here, line it up there, put that limit order wherever you want to take your profits. Or you can say, I just want the trailing stop to take me out wherever you want. You can put it way off the screen. And then if the trailing stop continues to come down, then it will, and we got stopped out. So that's what would have been a good place to put the limit or trailing limit, right? We'd be long right now if that was a trailing limit. That's exactly what we were just trying to mimic when we did it over here. So this one here, see how it came down, spiky dikey dude? Spiky dikey dude right through there, punctured our stop, trailing stop. And then you say, well, you're holding your stops too close, Lan. Well, that's might be true. It's true with this market for sure, because this market's weak. We could make this market, we could hold our stops back further. But remember, if you hold your stops back further, then when you do get stopped out, the distance is in that case, like $280. That's why I hold my stops a little closer. But you might get stopped out. But if you're getting stopped out all the time, you shouldn't be trading. You're in a crappy market. Don't trade if you're in a crappy market. That's the whole idea. That's why you have the human intervention. so that you don't just take every single arrow that comes up. Yeah, oh, I'll just trade all the arrows. Okay, well, that works great when you're in a nice market that's really trending. But today, the market's just been really crappy. We haven't had a good market today. You can see this whole thing has just never really moved at all today. And so it's been really hard to trade. But some days really active and good, and the markets trend a lot, and you could take every arrow and you'd make a lot of money. But that's just not what's happening today. The market's just kind of dead. So we just need to recognize that and not trade. So we just kind of learn the tools, though. That's what we're really interested in. Okay, so that's your OTO for entry. So let's see, let's get one in there. We got a possibility of one coming in right here. So we'll try again. Try again. Now we could go in and program the limit order too. Let's do that. That would be fun. Let's see how this one plays out. Now, if the market starts to fall, that yellow dot will flip to the other side and the stop will jump to it and start trailing down. And if we want to take our profits, we can take our profits right in here. And you can see right here, it tells you, it calculates for you. That'd be a $300 profit over there on the left-hand side. Let's say we want to make $500 a day. Well, we bring this down. We just put it right at $500. There we go, $505. Now we're already down. Well, we've been messing around. So we're down 430. So if we want to make 500. But what I like to do is say, I'm down 430. So I'll put this at 430. So I can make my money back. So if I get, the market gives me my money back, then I'll take it. The market's just being stupid, going back and forth, not going anywhere. We're not getting any kind of trend out of this thing today. Lousy market to be day trading today. But we're here, so we can't not do it. We can't just say, well, lousy market. See you tomorrow. That's no fun. We got to practice, right? So, all right, we're going to try it again. It's going, it's rising. Now you're like, well, Lion, it's rising. What do you want to do? Well, you could use a market order version. Okay, we can come in here. I don't know if I have a market order version in here. Let's create one. Okay, we're going to come in here. We're going to right click. And we're going to come in here. We're going to add a new OCO order. And you're going to say, I'm just going to do a market order. This is going to be a buy market. And so we're going to come in here. We set this up to be a buy market. We're going to set our stop back. We're going to maybe 25, and we're going to put our limit out there, maybe 80. And we can always adjust it. And then we're going to come down here, and we're going to just say that's all there is to it. There's nothing to it. Oh, we're going to trail our stop. So where are we going to trail our stop? Let's trail our stop on the ATR. All right. So we're going to say, since that's the tool we're using. Okay. So now if we want to just buy, we just, we got to come in here. Let's give a little bit more description than that. So we're going to say buy market, and we're going to say our stop is set at 25. Let's just go 25. And our limit is 80. And we're going to trail ATR. All right. So there we go. Now all we do is just hit boom, just like that. And you're in, and everything's set up for you automatically. So now you got your OCO and your OTO. You're all set up. There's no OTO here. This is just OCO. So you got a trailing stop that's going to trail up on the yellow dot. Now the yellow dot's a long ways back from where our stop is. So touch it. Go ahead, touch it. Oh, it touched it. Good job. Okay, that was a nice winner. Closed out $400. All right, so that's a good little example. And that's a buy market. Now you'll notice that in the drop downs, the same drop down is on every button. So if you create one, it'll show up down here too, and you can say, oh, I want my buy market there, and I want my sell market here. We haven't got a sell market. Let's create one. Okay, we're going to come in here and we'll add a new one, and we'll come in and we'll say this is going to be a sell market. Sell market, and we're going to have the stop, do the same thing, 25. 25, and we're going to do a limit at 80, and we're going to do a trail ATR. Now we're going to come in here. This is going to be a sell stop, sell, and we're going to have this. We're going to be 25, and this is going to be 80. Come on, man, 80. And then we're going to come in here and go trail on the ATR, just like that. Very simple, very easy. Now we can come in here, and we got one on each. See? we got a buy and you can just drop down and pick whichever one you want here. Oh, you want that one on there. Oh, you want this one on there. Oh, no, we want our buy on there. Where was it? It's clear down here. Okay, so there, now we got a button that does buys, and we got a button that does sales, and automatically sets up our OCO. One cancels other. But what if we want our intercept order to be here? Well, we had 99, right? We had 99. That's a sell market order. This is our OTO. There it is right there. So now on the third one, we have our OTO, stop entry, stop 50, limit 80, trail ATR. Maybe we don't want that stop to be 20. Well, that's good for now. So we're going to come in here and, oh, look how far back our little yellow dot is. That market really started to tear up. That's where we made our $400. Nice job. All right, let's wait and see what happens here for a second. We just have to watch the yellow dots. Where are they? Are they where we want them? They could be a little tighter, Lan. Okay, well, come in here and make them a little tighter then. I'm not going to make them way up there. Well, that's a little too tight. Okay, let's come in there. That's good. We'll go there for now. So we're going to come into our trading tab, and we're going to come. Oh, yep, that's it. And now we got our OTO. We just click that one, drop it on the screen. There. Now we got it all prepared to capture the reversal if it reverses. Now, you know what? We need to do a limit order, right? Let's do an auto trailing limit order. So we're going to come in here and create a new button. So we just click this little button right here. See this little plus sign? Boop. Now we got a new button. So now we can come in here. Come in here, add a new order. And how are we going to do that? We're going to come in here. We're going to call this this is going to be a number 99. We'll just still start of our set. We'll have a set of 4, right? Which means we'd have to go over and change those other buy market and sell market to be number 99 because that's our set of 4. So we're going to come in here and we'll go 99, and we're going to make it be a limit order, and we're going to trail the ATR, and we're going to stop. Let's go 25 and trail ATR with a limit of, what should we say, 50. Let's do 80. We can always move it. Okay, so now we're going to come in here, and this is going to be a limit order, and we're going to make this be, what do we say, our stop's going to be 25, and we're going to make this be 80. And it might be these numbers for this particular market, the NASDAQ, but when you go to the Dow, these numbers might be different. You have to see what your risk tolerance is. So we're going to put this one on. Oh, we got a trail for entry on the ATR. And we're going to trail this one on the ATR. Now, that's the ATR to ATR. I think before when I've done this, I've used 2 tools, and I've had one of them trail. Instead of the ATR, we're going to have trail on the parabolic SAR. It works a little bit better. So we have to turn on, if we're going to do this one, we have to have the parabolic SAR on too. So we're going to come in here, and we're going to actually come in. Limit 99. Yeah, that one right there. So we're going to come in here with the parabolic SAR, and that means I'm going to make the stop back a little bit further. Let's go 35. So the stop, we're going to put this in at 35. And the reason I'm doing that is because you watch, when we turn on the chart overlay parabolic SAR, it's back here farther. Oh, I don't parabolic SAR. I want this one to be TNT defaults. Go like this. Ooh, it's a long ways back. We have to scoot that in for a limit order. Well, we're not going to be using it right here for a limit order anyway. It's too far back. So let's keep it. Let's go right click, and we're going to go save and apply settings to all charts. Okay, so we're going to save this. But we're short the market now. We got a little spiky dikey do in. It came in here and spiked us, and now it's continuing higher. That's where you get in with a limit order. That's the one we were just programming. Okay, we're going to get stopped out. Oh, we got stopped out. We got our ATR too close, Lan. Let's go. Yeah, but we wanted it a little closer so we could get some action. 7. Go back to our trading tab. Man alive, you're missing this one. Well, I was programming buttons. Don't get after me. All right, here we go. Okay, we can. What are we going to do? Do we think it's going to stop back and spiky dacky do us? Probably not. We moved the stop back farther. Well, maybe. We don't, never know. Come in here, and we got a pretty good little run going here. It's breaking previous highs. I think we're gonna let's use the QOCL3. Try and catch a reversal. We're not using the red dots right now. The red dots are not being played. Oftentimes we'll use the red dots when you do the limits. We'll put the stop. We'll put the limit order on the yellow dot to enter on the yellow dot, and then the stop order will trail on the red ones. So you have that little gap in there between the yellow dots and the red dots, and that's your risk limit. But this market's see, and that works pretty good. You can see when the market's actually trading like this. If you do that, and they both end up at basically the same place. So it ends up working pretty well. See that same thing here. You put your stop, you get in on use this one for the limit, you get in, and then this one is your stop, and then they end up at the same spot down here. But when the market's dead, like through here, that's not what happens. And so now this market's taken off like a rocket ship. Okay. Oh, we got the reversal. So this is the reversal. So we're just going to wait and see if the dots flip to the other side. Now these two are set. That limit's not following those red dots. That's not what that's doing. It just happened to look like that. So these are your set stops now, limits, because they were triggered. This is a one triggers other, OTO. So now that this order has been filled, this one's been triggered to be active. So it's just going to sit there, and we put it 50 ticks back. Is that where we put it? We must have. Oh, 25 ticks back. Oh, no, we use this one. Oh, yeah, stop, 50 ticks back. 50 looks better. We probably should change these. This sell market, that's way down here. Where's that one? Sell market. We're going to change that to, from 25 might be a little too close in this market. We're going to make that be 50. And then, so I got to change it here to 50. All right. And then we're going to do the same thing here. We're going to change this one. We're going to make that one be, stop is going to be 50. And we'll make it 50 down here. Okay. So we're going to use 50 stops. Oh, this one here, limit. Yeah, we're going to, on that one, we're going to keep it 35. All right. Now we're looking for this baby to fall. Tumble, tumble. Tumble, tumble. We're down 530. So we could put our limit at 530 just to recover our money if it goes that far. 530. There we go. So it's got to go that far to get all of our money back that we've been dinking around here with. All right. Come on, buddy. Fall for us. Fall for us. Being pretty quiet. Being pretty quiet. The only thing we can do now is just sit here and poke our voodoo doll. Oh, that's green. Don't poke the green one. That'll make the market go up. Oh, look. I poked the green voodoo doll, and that made the market go up. We want the market to go down. Hit the black one. Black voodoo doll. Black voodoo doll. Fall, fall, fall. No, no, no. Don't go up. I didn't mean to hit the green one. Oh, no. I hit the green voodoo doll. Come on, buddy. Fall, 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 fall. Down, down, down. Don't stop us out. That's no fun. Nobody has any fun getting stopped out. Come on, buddy. Come down. Should never have hit the green one. If you fall, I won't poke you. If we get stopped, you get, well, you can see I should never have poked the green one in the first place. Now what are we going to do? Well, we're getting an intercept up here on the red dots. Can you trail on the red dots? You certainly can. All you'd have to do is just come in here and create one that says trail on the PSAR and put it in there. Let's see. Let's do this one again. Now we got all of our buttons programmed. All we have to do is just decide when we want to get in and out. We just push the button and sit back and stab our voodoo dolls because it's the only thing we can do. Your power is choosing when to push that button. When do you think the market's going to flush? When do you think it's going to turn? When do you think it's going to make that move for you? And then just pick the one you want. Drop it in there and you're all done. It's nothing you can do. It's going to do automatically set up the trailing stop. It's automatically, if the market doesn't fall, it's just going to get you back out with a loss. Of course, you can put it the other side too. The same order, the stop entry order, that QCO3 that we got programmed in there, that works both for long and short. Doesn't matter. Because remember, track and trade smart. It knows if you put it above it, that it's got to buy. And if you put it below it, it means it's got to sell. So the yellow dots are on the upside. You use the same button, use the same setup. You only need one for stop. You only need one for limit. Why you need a market, a buy market and a sell market? You need two buttons, one for buy and one for sells, because that doesn't have a price that you specify. So you need to use a button for buy and a button for sell, a button for stop, and a button for limit. That's it. So now you got your system all set up. Let's come in and call this our set. So we're going to come in here. This is a buy market. We're going to put this as number 99. So now we've created a set. All of them starting with number 99. So now you know that these were all designed for this particular market. Look, we got dashes in some and not in. Oh, look, we got failed. We got a trigger. One triggered, so these are active now. The stop is active, so is the limit. Now we just need the market to fall. Tumble, tumble, tumble down. Now that red dot's coming in there, and it already flipped, so that's a good signal for us. Good sign that it's going to turn. Come on, you can fall a little bit. Oh, now we're down $780. Let's put in a second short. So now we need 340 on this one. We got 320 on this one. That'd be close enough. If we hit both of those now, we'd get all our money back. We got two contracts going short. Come on. Just go down to those little blue lines. That's all you need to do. Go to the blue lines. Come home to mama. Let's turn on overlay. Let's go on the VWAP. Where's VWAP? Oh, that's why it's going up. VWAP's above us. That's not good. VWAP's a rubber band. Think of VWAP as a magnet. It's kind of like, okay, see our stop finally jumped to the first yellow dot. Finally got a yellow dot. Okay, it needs to fall down to those blue dots. Those blue lines, little blue triangles. If it does that, it'll automatically take us out and we'll have all our money back. Come on. Isn't this exciting? It's so exciting. Robert says he worries about me. I've been talking to myself forever. I'm my only friend. I've been doing this way too long. Come on, come on. Drop market. Now we can start stabbing our little black guy. Come on, little black. Come on. Man, I'm digging holes in the side of that one. We'll turn him around. Stab him in the back. Come on. Cast a spell on the market to fall. Cast a spell on the market to fall. Come on. Come on. Oh, don't stop us out, you rotten dog. You worthless mutt. Piece of crap. Now what? Now what are we going to do? Trade during a better time of day. That's what we're going to do. Watch it now turn and drop. We should have had our limit order on that one. There's our 4 bars. 1, 2, 3, 4. Going to get our 2 greens, and then it'll flush and fall once again. Maybe what we want is we want another one that trails up on the price bar. We'll just do it manually right now. Come in here and we'll go edit, and we'll say trail, price bars back, and we'll just put in here 1. Now it's going to trail up 1 price bar back. So we'll try and catch a reversal to the downside again. We get 4 red bars, bop, 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 2 green bars, and then we'll get a whole bunch of red bars. Do you think that'll happen? I don't know. Happens sometimes. Oof. That's a big push. Long set of dots, short set of dots. Another long set of dots, and then we got the VWAP up here. This is remember, the VWAP acts like a magnet, pulls price to that little blue line. Look at MACD. It's way up here in the top. Oof. Oof. Okay, we got our trailing stop for intercept to the short side. We've got about 6 minutes before the bell. 7 minutes before the bell rings. Market's over. And we got $860. We gotta make in 5 minutes. Can you do it? We're trading with 1 contract. Now we're trying to make money. Before we were just goofing off. See if we can make some money. But we got to have a cooperative market. Okay, we got 11 seconds till we get a new bar. 11 seconds. 7, 6, 5, 4, 3, 2, 1. New bar. There it is. Jump or stop. Okay. What are we going to do on tomorrow morning? Tomorrow morning, we're going to talk a little bit about the current markets. We're going to look at our UBI portfolios, universal basic income portfolios. So be here tomorrow morning, bright and early, 9 o'clock. Bright and early. By that time, we've already had breakfast and walked the dog. All right. All right. So 9 o'clock, we're going to have another class tomorrow morning at 9 o'clock. We'll do some analysis on the longer term charts. Look at our long term portfolios. And you could apply these same strategies. Probably not going to use the OCOs on a daily chart, but you can. Those are mostly designed for day trading. But you can put your limit orders and your stop orders and triggers. I mean, you're not going to use triggers, but all the same concepts. Okay, you could use triggers because they're good till canceled. Man, look at that market go. Okay, see it trailed up 1 price bar back. We're just looking for a reversal. We'll put another one in here. Let's put this OTO, the stop. Let's put this on the yellow dot. So we got 1 trailing on the yellow dot with the OCOs. So we got an OTO trailing on the yellow dots, and we've just got a naked widow out there trailing 1 price bar back to the short side. We just need a little rebound. Look at that. Long set of dots, short set of dots. Long set of dots. Just like I said, all the way up to the VWAP. It's going to go up and touch the VWAP. Oh my goodness. Why didn't we take a long position there? How much would we be up if we'd taken a long position off that yellow dot instead of short? We'd be up $500 with a single contract. Just broke the VWAP. Man, we're going into the markets hard on the close. Everybody that was shorts buying back. Is that what's happening? Possibly. I don't know. A lot of volatility to be going into the market hard on buying on the last 5 minutes. Usually that's people bailing out of their short positions. So they're buy, offset their shorts. Come on, buddy. Come on, buddy. Yeah, they all moved with our one bar. We've only got 4 bars left. See what happens within the next 4 bars. It hit that blue line, which is the VWAP. That might be a stop sign. And watch it flush. Come on, flush. 3 minutes to go. 30 seconds on this one. 30 seconds on this bar. We're short 1. That's the naked one that got short. So we don't have any protection to the upside. No stop on that one. We should put in a parachute stop. What's a parachute stop, Lan? Just a stop you stick up there in case everything fails and the computer dies and you're stuck without any protection. You don't want to go without protection. All right. We're sitting here, so we don't need it to be where in any particular spot. We just want to be close enough so that it doesn't destroy us if the computer fails, internet fails, software crashes, and we can't get it back up, and the market closes, and we're like, oh no, what do we do? Well, we got a stop order sitting there. It's called our parachute stop. Okay, we got 3 minutes. Come on, buddy. You can do better than that. You can flush harder than that. Flush really hard. Great big long bar. Big, huge long bar. That's what we want. Except for we'd have 2 contracts. We need $800. We need more than that. We need $820. Not that far. That'd get us all our money back, but we just come down there and hit that. I don't think that's going to happen by the time the market closes. Those red dots have not intercepted yet, and they're going to have to intercept up there probably for that thing to probably not going to go. We're going to go. We're not going to get what we want here. Come on, flush a little bit hard early. Come on, you can give us a nice big flush here 2 minutes before the market closes. Come on, come on. Give us something. Something. It's like I gave you something, Lan. Look, I gave you all those green bars, and you were trying to go down. I didn't want to go down. I want to go up. I was exampling the short side. I know. Markets talk to you. Did they talk to you? They talk to me. Usually they flip me the bird. That's what they generally do. Market doesn't like me very well. It says bad things to me. All right. You see that little dot jump? The little yellow dot jumped up one closer. The trailing stop jumped up with it. That's the trigger, OTO. We just need the market to flush out hard down, make some money. Doesn't want to do it. Come on, you got 1 minute left. You can't give us something in the last minute. There we go. Now we got 2 short. 2 short. We got 2 stops now. We got a parachute stop and we got a ATR stop. But market's not going to flush. Come on. Look at our MACD. MACD says it should flush. That's a lot of volume coming in there. That last bar. Look at that bar. People are selling. I can feel it. Come on. They're hitting the sell button. Sell. The market's closing. Get out quick before the market closes. Oh, there's the close. There it is. Now let's see if the after hours, everybody dumps it after hours. What you gonna do? What you gonna do? Hey, if you guys have been having fun, go down there and click the little thumbs up thing. Do that. It's always fun for me to see that you guys click the thumbs up thing. I always like to see little thumbs up, saying that you at least had some fun while you're here today. You learned something. Learn how to do these little OCOs, even if it was on a crappy market that didn't give us any money today. Tried to give us money. We were just going the wrong direction. It tried. It really did. Come on. Down it goes. There it goes. There it goes. There it goes. Look at that. Look, that's what we wanted. A little bit more. Oh, come on. all the way down, 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 down there. There you go. There you go. There you go. Boom, 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 boom. We got it, baby. We got it all the way back to $12. We're only down $12 after all that. Those of you who left early, too bad for you. All right. Too bad for the guys that bailed out and left early before class was over. They didn't get to see the big win here at the end. All right. That's what you get for sticking around and staying with class, because it's not over till the market sings. All right. All right. Here we go. Got something for you real quick for those of you who are not aware of the software I'm using.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, guys. Glad you stuck around to see the final finale. We got ourselves all the way out of the hole. Only $12 down for the day after all that playing around, using all those tools. And that's how the game is played. All right, guys. I hope you had fun. And if we see you tomorrow morning, bright and early, 9 o'clock, then we'll have another good time together. All right, we're going to go look at long-term charts, not going to do day trading in the morning. See you then. Take care.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.